Athena, I said it would 51x, basically based on people searching for higher yields in the treasury yield, going and using their synthetic dollar and the way that they're using the basis trade within Bitcoin to generate that yield. I think about a 34x improvement on EtherFi, as people now can spend the stablecoins using their offline payment services and doing the sort of like banking services that EtherFi offers. And then Hyperliquid is something about 120 or 130x uplift, because it's going to become the largest exchange of any type. I'm not going to make a 1000x return on any of these names. Yeah, I 100% agree with you. But these are also names that actually have product market fit, thousands of users, billions of dollars of annualized revenue, so they're not going away tomorrow.
We are approaching Q4 of what could be the most explosive stretch of the current crypto bull cycle. The Federal Reserve is tilting toward easing, political pressure on monetary policy is mounting, and liquidity is beginning to pour back into risk assets. For seasoned investors, this is a familiar setup. Every bull run begins with whispers of rate cuts, grows with policy accommodation, and ends with a euphoric wave of speculation. But this time, the scale is bigger, the backdrop more dramatic, and the potential gains more staggering than before. According to Arthur Hayes, the co-founder of BitMEX and now CIO of Maelstrom, the coming months will create opportunities that most investors will underestimate. Hayes' thesis is simple, yet powerful. The Trump administration's drive to flood the system with liquidity will unlock the kind of upside that only comes around once in a generation. He argues that we are at the midpoint of the bull market, not the end, with the real fireworks still ahead. Historical precedent backs his claim. U.S. presidents have always leaned on the Fed to juice the economy, whether it was Lyndon B. Johnson bullying Fed chair William McChesney Martin in the 1960s or Richard Nixon arm-twisting Arthur Burns a decade later. Today, Trump is no different. The machinery of credit creation is already being set in motion, from sovereign wealth fund deals to loosening the constraints on commercial banks like Wells Fargo. And when those dominoes fall, the tide of new money will sweep into hard assets. Bitcoin, Hayes insists, stands to be the biggest winner. But Hayes doesn't stop there. He sees this liquidity cycle spilling into a broad swath of the crypto ecosystem, creating asymmetric returns in projects with real product market fit. While Bitcoin will benefit from macro flows, he argues that protocols already generating billions in annual revenue, serving thousands of users, and redistributing profits to token holders could see outsized multiples. In Hayes' view, this is where fortunes are made, not by chasing hype, but by concentrating on projects with structural staying power. For investors searching for the next leg of exponential growth, his analysis offers both a map and a warning. Ignore the fundamentals, and you'll miss the life-changing opportunities. And in today's video, we break down Hayes' latest outlook on rate cuts, stablecoins, altcoin protocols, and his conviction that the crypto bull market is only getting started. If you want more in-depth insights like this, make sure to hit that like button, subscribe to the channel, and stick around. You won't want to miss what comes next. Thanks, and enjoy the video.
So I think right now, I haven't looked at this morning at where the 2 years trading, 2-year treasury note. I believe it's off something like 50 or 60 basis points over the last sort of week and a half, 2 weeks after the non-farm payroll print, the negative revision to jobs data in the US. I didn't check what PPI came in overnight, or CPI came in overnight, but I guess PPI was lower than expected 2 days ago. And obviously we had Powell pivoting at Jackson Hole, basically opening the door for rate cuts. And so I think that it's probably going to be a 50 basis point cut at the Fed. I think Trump investors want more. And obviously that's why Trump is putting all the pressure on Fed Governor Cook. There's rumors that, I can't pronounce her name correctly, Kugel, however you pronounce that name. I saw a rumor somewhere floating around that, maybe she had some issues with her own, mortgage applications and, being a little bit more, I guess, street smart, she decided to just resign before Trump and the DOJ put the screws on her. And so I think that one way or another, just like every other president in U.S. history, the president will get the monetary policy he desires. You can take a look at Lyndon B. Johnson back in the 60s and Fed Governor Martin. Supposedly, Johnson invited Martin over to his house in Texas and physically assaulted him to get him to reduce rates. You had Nixon and Arthur Burns. Nixon putting a full court press with Treasury Secretary Connolly and others in his cabinet administration to make sure rates were lowered. And obviously, you have President Trump brow bashing Jerome Powell. And, just like every other Fed governor, Jerome Powell will provide the monetary policy that the politicians want, which means lower rates. It might take longer than you want, but it's going to get there. So I think we are in a Fed rate cutting cycle, even though, my own personal belief is that inflation will prove to be sticky in the next 18 to 24 months. And, if you don't own hard assets like gold, Bitcoin, US, whatever stocks in the US are doing well, you're going to feel the pinch of higher inflation.
So we're going to continue to get rate cuts throughout into 2026. How many do you think we're going to get, and how?
I don't know. It doesn't really matter at the end of the day, right? The Besson and Trump need money to be printed to fund their agenda, and so the Fed's going to cut rates. There's going to be, maybe it's not direct QE, but there'll be different ways in which money is printed. Maybe it's through the mortgage market. Maybe it's through the banks lending. Maybe it's through these sovereign wealth fund deals that Trump is doing with other nations. Maybe it's through the something like $100 billion or however much there was allocated to the Department of Defense as equity to then leverage to then buy stakes in resource companies like MP Materials to help with rare earths, whatever. There's so many ways in which they can provide credit to the system. And yes, this credit will positively affect some particular sectors more than others. But the best thing about Bitcoin is that we don't care where the money is going. We know that as there's more dollars, yuan, euro, yen in the world, that currency is being debased, and this asset that we own that is a fixed supply is going to go up asymptotically.
Do you think that we're coming to an end of this bull market cycle in this year, or do you think we'll extend it out?
I think we're starting to get to the real meat of the cycle, middle of the cycle, because if you think about, Trump's a new president. Obviously, it's a second term after the Biden administration, and his first term, he's a very populist president. He did the biggest sort of handout to American people since Andrew Jackson with or probably LBJ with sort of the COVID stimulus checks, right? That's not a very, traditional Republican sort of measure to basically say, let's just hand out money to people, make sure that they stop bitching while we lock them in their house for the flu. And so when that happened, he is, have bona fide credentials as a person who's he wants to win elections. He doesn't have ideology behind it. So winning elections means providing free shit to people. He provided the free shit during COVID. He provided the free shit in 2017 with one of the largest tax cuts ever in American history. And he's going to provide more free shit. Otherwise, him and his, Trumpian Republicans are going to get voted out of office in 2026 and then in 2028 in the presidential election. So I think he knows exactly what he needs to do, which is provide free shit and print money. And that's what he's going to do. And now, obviously, the Fed and certain individuals within sort of the bureaucracy that is the American government have been sort of stymieing his efforts. But, domino after domino is being knocked down. And, by, middle of next year, it's going to be full steam ahead in terms of the Fed's on board, no more Powell. Maybe he's got 4 out of 7 Fed governors and he can do some other funky things with the interest on reserves or the discount window. And you have Besson doing these sovereign wealth fund deals. You have possibly Fannie and Freddie ending conservatorship, and now they can lever their balance sheets and add about $4 to $5 trillion into the mortgage markets, allowing people to re-leverage on their houses. So yes, if the consumer runs out of cash, what does the American consumer do when they don't have money? They borrow it. And so if I reduce the cost of money, then you can borrow more. And so I think that's why the price of money in this instance matters. Now, I'm more of a quantity of money guy, but I can see that, you can say the American consumer is tapped out, the housing market's, a bit overbought. Well, if I cut rates from 4.5 to 2, well, then you're going to take more leverage and buy more stocks and, max out that credit card and buy a new car and take out a home equity loan. So I think that's, a very short-sighted sort of explanation if you sort of believe that the Fed's going to start cutting rates and Trump is going to unlock all this liquidity on Fed balance sheets, the mortgage market. And, another thing that people are not really paying attention to is Wells Fargo has just been paroled out of jail. They were not allowed to increase their balance sheet for many years after the whole fiasco the criminal sort of customer shit that they did back. I don't remember exactly what it was, but I think in middle of June or early July of this year, They were finally allowed to increase their balance sheet. There's a very famous macro analyst, Zoltan Pazar, who estimates that they have about $450 to $500 billion of capacity in the balance sheet to buy treasuries and other debt securities now that they can grow their asset base. And so you have another liquidity engine in the commercial banking system in the United States. So I don't really care a fuck about the real economy. All I care about is the credit, and the credit's going to flow, and it's going to flow into Bitcoin.
The Federal Reserve may talk about being independent, but Hayes reminds us that politics almost always wins in the end. He predicts a 50 basis point rate cut as early as this cycle, with more to follow. For him, it's not about whether cuts happen, but about how much liquidity they unleash. Whether through the Fed's balance sheet, mortgage markets, sovereign wealth fund deals, or commercial bank lending, the outcome is the same: credit expansion. And as history has shown, when credit flows, assets with fixed supply, like Bitcoin, go vertical. Hayes is clear. He doesn't care where the new money flows first. Whether it goes to defense contractors, housing, or sovereign wealth deals, it eventually finds its way into Bitcoin and crypto. That's where his second prediction comes in: the rise of stablecoins as the Treasury's new weapon. Hayes argues that dollar-pegged stablecoins could become a central pillar of U.S. monetary strategy, not just in crypto, but in global finance. By channeling offshore liquidity into stablecoin issuers who in turn buy U.S. treasuries, Washington could reinforce dollar dominance and secure demand for its debt. For crypto, this isn't just a sideshow, it's the foundation of the next phase of growth. With trillions of dollars in stablecoin deposits potentially circulating across on-chain protocols, Hayes sees DeFi projects like Athena, EtherFi, and Hyperliquid as positioned for exponential gains.
I mean, I don't have the specific ratio, but in the presentation that I gave, I assumed that there was about 10 trillion of stablecoin deposits that would percolate around the markets. The protocols that I was shilling, Athena, I said it would 51x, basically based on people searching for higher yields in the treasury yield, going and using their synthetic dollar and the way that they're using the basis trade within Bitcoin to generate that yield. I think about a 34x improvement on EtherFi, as people now can spend the stable coins using their offline payment services and doing the sort of like banking services that EtherFi offers. And then Hyperliquid is something about 120 or 130x uplift, because it's going to become the largest exchange of any type globally now that you have all these people with stable coins who now want to trade on chain. Why do they want to trade on chain? Because they can. It's easy. High leverage, offers the type of products that they're interested in. So that's sort of where I want to focus in terms of like, obviously Bitcoin's going to do well. I don't know what that number is, but it'll be less than those in terms of the uplift. But sort of the riskier parts of the curve that'll benefit from this stablecoin adoption, I think, are these high cash flow generating DeFi projects. And the great thing about the zeitgeist now and sort of the investment community in the crypto space is that investors have punished projects that either A, never made any money, or B, made money but didn't give it to the token holders. And so if you're a project that is not buying back your token, is not giving back emissions to stakers, we as the crypto retail investor, or even some institutional investors, we don't want to touch it. I think we're finally getting around to that ethos, and these projects that are going to do well are going to be paying us as the token holders for making them successful.
But is there any other that you haven't talked about that you're bullish on?
Maybe Lido, e-staking, that kind of stuff. Again, I'm not a jack of all trades. I have a very concentrated portfolio. I understand my names very, very well. I can't say that these are going to be 1,000x names. Like if you buy some $5 million shitter meme coin and it goes to whatever, like, yeah, cool, you're going to make more money than me, but like, I'm not taking that kind of risk. I need to put a lot of capital into something and not be looking at my phone 24/7. So I think it depends on the type of investor you are. You might say, oh, well, I'm not going to make 1,000x return on any of these names. Yeah, I 100% agree with you. But, these are also names that actually have product market fit, thousands of users, billions of dollars of annualized revenue. So they're not going away tomorrow. Like, whatever, the hottest thing is in the new L infinity space, that's going to have no clients, and, maybe it goes up, but I just that's not in my sort of milieu.
You had mentioned, hype. And at that point, I felt like I'd already missed the boat. I think it's probably up, I don't know, maybe almost 2x since that point. But it's something that I keep getting my attention back to. I still haven't bought any yet. Do you think at this valuation, it's currently sitting at FDV almost $57 billion right now, there's still a lot of room left to grow?
Absolutely. I the I don't know what the number what the the developer count is now, but I when I spoke to Jeff, it was like 10 people. Maybe it's marginally higher now. As a person who's run a large exchange, the ability for this team to ship code is absolutely insane. I think the team in Athena is about 20 people. So you have some of these amazing teams who are able to ship product better than any centralized company can ever do, because they do one thing, they do it well. Hyperliquid is a leverage trading platform. They're moving into spot with the HIP-3 sort of permissionless listing mechanism. Now you can permissionlessly list perpetuals, which is something that a lot of other protocols have staked their name to. DYDX is one they did very, very well, but unfortunately they decided not to pay anyone out of the lots of money that they made, and that's why their token's a piece of shit. So I think that Hyperliquid next goal is to beat Binance. How does Hyperliquid get from here to the number one exchange of any type globally? Is it a fait accompli? Of course not. It's going to take a lot of work and luck and all that sort of stuff. But that's what I'm betting on, and I think it's moving in the right direction. The amount of energy that we've seen on these proposals for the USDH from every major stablecoin issuer tells you how integral Hyperliquid is to the trading ecosystem within crypto within basically 18 months, if you want to think about it.
Yeah.
So the forward on this is amazing. And as more people learn about this, it's only going to get better. The one thing that gives me a bit of pause is the massive unlock of the team tokens in November. So we're going to have to see how that sort of plays out in terms of positioning. But as I said in the presentation, my 2028 target is in the 100x plus sort of return if we get this sort of massive move into stablecoins.
Let's say that we have just an exceptionally strong kind of October, maybe November. Let's say, I don't know, Bitcoin's up at 150, 175, something like that. ETH is ripping. And it's starting to feel kind of really parabolic. And how are you going to play your portfolio? I know that from the gist of what I got from what we just talked about was that you think that this market's going to extend well into 2026. But if things start feeling really euphoric in Q4, are you going to take some profits off the table, or are you going to still hold strong? Or what are you kind of looking for? How are you going to assess your portfolio and make some decisions?
I really care about what is the expectation and trajectory of money printing, and so I don't. My belief is that Trump hasn't even gotten started. He's going to have all the Legos in place to really juice the U.S. economy starting in middle of 2026. And so the question is, what is the market forward on that money printing? I don't know what that looks like. If I believe that the market's expecting something so insane in terms of the amount of money printing that Trump can do, then okay, I'll take some chips off the table. So I don't have a price level in mind. It's more of a feeling of like, okay, well, is the expectation on the money printing too high or too low? I'm writing a piece right now about the collapse of the euro, predicated by a French default. And so I think there's some other things happening within the global markets that could continue to propel this notion of money printing. And at the background, I have to recognize that we are in the midst of a unipolar to multipolar change in world order. And change for politicians is bad because, what do they do when change happens? They print money to make sure people feel okay. Mm-hmm. And so if I overlay all these things together, I have a very bullish outlook for the amount of money that's going to be printed between now and the end of the decade. The question just becomes, what are the expectations within the crypto ecosystem about, or just a general macro ecosystem about what that is? I think that people are underpricing the upside in equities, in crypto, and everything. They don't realize how badly all these governments need to print money. Yes, it's going to end in absolute Armageddon at the end of the cycle, whenever that is. But I don't think we're there yet. Governments are only starting to get the mojo back about, I'm going to print money to buy defense goods, to hand out handouts to the population. China is, battling with its own sort of deflation and doing drips and drabs of stimulus. They'll come around to the party too, in some way, shape, or form. The Japanese have to do it. The Europeans have to do it. The Americans have to. Everyone has to do it at the same time. And we have this AI robotics deflation deflationary effect, which could completely destroy the fractional reserve banking system if everyone doesn't have a job and now has to service all these debts. What do? Do you fully reserve the system and print money to make sure the banks are okay, or do you let everyone go bankrupt? I don't know, right? We have a lot of big societal choices, and usually when humans have big societal choices, the government chooses to print money first. So I think we're in this first inning of this massive change in how we organize this global society, and therefore I don't believe in the 4-year cycle. I believe that we can continue ripping through, $150, $775, $200,000 Bitcoin because of this massive macro overlay of what is happening right now between now and the end of the decade.
In practical terms, this means the coming wave of liquidity may lift Bitcoin, but the most explosive returns will likely come from the protocols built to capture and recycle stablecoin flows. Hayes points out that crypto investors have become much more disciplined since the last cycle. They now punish projects that fail to generate or redistribute revenue. In this environment, only those protocols that share profits with token holders through buybacks, staking rewards, or emissions will thrive. Names like Hyperliquid, already gaining traction as a decentralized exchange that could challenge Binance itself, are central to his thesis. With massive growth potential, strong fundamentals, and the right macro backdrop, these projects could deliver multiples that make even Bitcoin's rally look tame. Hayes does, however, acknowledge risks. Token unlocks, regulatory battles, and shifting investor sentiment can all disrupt the trajectory. But his broader argument is that these risks are dwarfed by the sheer scale of global liquidity creation. Governments worldwide are cornered by debt, deflation, and geopolitical pressures, and history suggests they will all reach for the same lever, the printing press. From Washington to Beijing to Brussels, stimulus is becoming inevitable. In a world where every government is forced to debase its currency to survive, crypto's fixed supply assets and high-yield DeFi protocols look like the ultimate escape hatch. The implications are staggering. If Hayes is right, we are not in the late stages of a tired bull cycle, but in the opening act of a liquidity-driven surge that could extend through 2026 and beyond. Bitcoin at $150,000 or $200,000 may no longer be a moonshot prediction, but a conservative baseline. Altcoins with real revenue models could multiply dozens, even hundreds of times over, and stablecoins, once dismissed as boring, could quietly become the linchpin of global finance while simultaneously supercharging crypto markets. So where does that leave us as investors? The path ahead is volatile, yes, but also ripe with opportunities for those who position themselves early. Hayes' analysis underscores a simple truth. Liquidity is destiny, and crypto remains its purest expression. Whether you believe in his exact numbers or not, the logic is compelling. When governments print, crypto wins. Drop a comment below with your thoughts on Hayes' predictions. Do you think stablecoins really are the Treasury's secret weapon? Or will Bitcoin remain the ultimate safe haven? If you found this breakdown helpful, don't forget to smash that like button and subscribe to the channel. Thanks for watching, and stay tuned for more deep dives into the forces shaping the future of finance.